In the 2020 Financial Wellness Index from OCBC, it showed that a staggering 30% of Singaporeans thought that investing is the same thing as gambling. And I suspect that the number is actually a little bit higher if you take into account that people might be behaving like gamblers but not really thinking that they are. And this is because there can be a really thin line between the two concepts, especially for those that might be new to the markets. I thought it's a great time as well, especially considering the exuberance in the markets. It seems like these days everybody wants to be in on it, and especially when you look at the markets in crypto, when you look at the stock market itself, it really is just booming. So this is a mix of sharing my personal stories as well as the observations I've had as somebody who's been in the markets for more than 10 years. And it's not me on some high mountain suggesting that whatever I do is correct. Instead, it's really that I have lessons that I've learned and I wanted to share some of them as well, and hopefully it might help you out. I'll cover the differences between investing and gambling, especially that middle ground where it's not very clear, how gambling-like behavior can really hurt us, and finally, of course, end with a few tips that we can use to improve our approach as investors. Hey guys, it's Sunmin and welcome back to Your Money Game, the show where we'll get better with saving, spending and investing. So despite the two differences in title, there actually are similarities between investing and gambling. Both happen to involve some level of risk. And yes, I know that in investing there are some risk-free assets such as bonds, but at the same time the returns are usually quite low. Both can rely on information, data or signals, because we have to remember that there are professional gamblers out there as well. Whether it's analyzing horses because they're horse racing, or maybe just looking at the team structure of football where they're betting on football. And pros on both sides of gambling investing do understand that it's all about managing risk. They both have a systemic way of ensuring that they maximize reward while minimizing their losses as well. But you know what? If I had to guess, I would say that the majority of gamblers aren't professionals. And when it comes to the markets, there are really clear signs of gambling as well. Gamblers are generally short-term and erratic when it comes to the decisions that they make. They might not have a plan at all, or they constantly break their plans. They rely a whole lot on hope, but especially on tips as well. And finally, there's that big bet that they tend to make on some kind of home run hit that they hope will pay off. But you might be saying, dude, come on, that's really obvious and clearly not me because I'm watching a personal finance video right now. But like I mentioned earlier, there's a little bit of a grey space in between where it's genuinely difficult to tell. Have you ever been in a trade where you decided that, hey, I should change my rules because of a certain thing happening? You could be following an investing style for a while, and while things are going well, you might be cool, but then suddenly when you hit a rough patch, and then you see this shiny new thing over there and you go like, maybe it should be me jumping ship so that I can get that quick win. Or perhaps you look at your portfolio and then you realize that, for some reason, the majority of what I have is really just what's talked about on media. The examples I showed aren't really gambling per se, but are possibly gambling-like tendencies that show up in our decisions as investors. Speaking from personal experience, here are some potential negative impacts. When you're in a trade without a clear plan and the trade or investment goes against you, it can really wreck how you feel. And a real case in point was that many years ago, I was dabbling in palm oil futures, and at one point I was losing so much money that when I was at work, I was staring at my laptop, but nothing was going on. I was literally just constantly thinking about my losses and I couldn't focus on work at all. This isn't to say that my current approach suffers zero losses or that my losses don't really affect me in any way. So to give you an example, last year during the crash in March, I suffered a 30% loss. But at that point in time, because I understood what I was doing, I understood why my approach was a certain way, I didn't have such overwhelming feelings that it prevented me from doing my day job. The biggest impact on me was really losing time. For quite a while, I was hunting this magic unicorn of a trading system that was supposed to guarantee to make me a millionaire when I was 25. If I could advise my younger self, I'd say that if you wanted to experiment and trade and try and look for a magic system, do so with paper money or maybe allocate a small amount of your portfolio to do it. Instead, I used my entire portfolio to chase after a holy grail. And while every now and then I might score a big win, unfortunately, net, I suffered more losses than I had wins, and therefore that really demotivated me and usually just set me back to zero. My final example is the impact of fear and emotional scarring that can happen because of losses. Seeing the wreckage of some people who lost big on GameStop was really painful to watch. And some of these guys lost their entire life savings. While I didn't encounter a catastrophic loss in a trade, nevertheless, sustained small losses really weighed on my mind as well. And during a period, I quit the markets entirely for a couple of years because I was just so fatigued and I had no idea what I was doing. So thank you, fear. However, I do hope that you're not afraid to click on that like and subscribe button, because that tells the YouTube gods that this video is worth sharing out to more people, and you know what? It really helps my channel grow as well. So let's move on to the last section of how can we improve and achieve consistency as investors. I think that becoming an investor is really about gradually improving your decision making and your mindset, instead of thinking about it as a switch that you turn on and suddenly you're a magical investor. Firstly, stop the pursuit of home run bets. It's a fine line between a series of high conviction trades or investments that build a portfolio versus going all in on one or two moves that you think is going to make you rich. Look, I completely understand the temptation. Confidence builds up, you are so sure that this thing is going to work, so the logic is, why not go all in? I've been doing this for long enough, and the temptation, at least for me, never truly goes away. But for the sake of your investment account, resist! The only time when I've seen this behavior maybe make sense is for those that are very specialized and experienced traders that are really making large bets. And even then, those guys know what they're doing because they've got a system in place that are really taking care of their position sizes, minimizing their losses, and maximizing their gains. Next is to gradually shift yourself away from relying on other people and instead rely on yourself for your investment decisions. Investments or trades made from recommendations can work out occasionally, but rarely are they sustainable in the long run. And that takes away valuable time, money, and effort from your existing investing approach. It's cool to keep your mind and your eyes open to new ideas and new investment approaches, and that might even inform the way you analyze things, but they shouldn't make up the bulk of your investment decisions. The third tip is to extend your time horizon towards the longer term. Remember what I said about those gamblers and short-term thinking? Do the exact opposite. What this really means is just being aware of our own temptations to try and get that one big home run that's gonna make us rich really quick. Who wouldn't want to make $10 million on a trade and then ride your Tesla into the sunset? Many of us operate with the mindset that the markets are really there for us to pull money out of if only we have the right method or tool. And it really takes a lot of time and acceptance that investing is actually a long-term and gradual approach of building wealth. The fourth point is to manage our own expectations of what success looks like in becoming an investor. These days, it's really easy to just look around and you see a YouTuber, you see a blogger, you see some guy on a forum talking about his spectacular gains in 2020. And suddenly we get it in our heads that to be a successful investor, you must have like some crazy double-digit returns, 50%, 80%, 100% even. If you're new to the game, let me just say that those kind of returns are possible every now and then, and maybe if you're lucky. But it's truly difficult to have that kind of spectacular returns sustained over a long period. Even Warren Buffett's Berkshire Hathaway annualized a 17% return year on year starting since 1985. And that's one of the most experienced, one of the most celebrated investors of all time. Now, that's the gold standard in the long term. I think it's wise for us to manage our own expectations of what returns should be like. My final tip that I want to leave you with is that it's actually okay to gamble every now and then and acknowledge and accept that you are an imperfect investor. What? Sunmin, after all that you're telling me to YOLO? That's not what I'm saying. The important thing is to manage ourselves well enough that we don't blow up our investing approach or investing account. So if you have an itch that you really need to scratch, go ahead and do it. But just do it in a small way that doesn't really impact your overall investing approach. And please don't make it a habit. Now, I'm far from what I would consider a great investor, But over time, at the very least, I can tell myself in the mirror that I've gained a little bit more confidence and a little bit more consistency in my approach. So I hope you guys found this useful, and don't YOLO into GameStop right now, please. And if you did, I would really appreciate your support in clicking that like, subscribe, as well as that bell button, because I'll be back again next Sunday with a brand new video. And until then, you take care and keep playing your own game.